NFP Day Warriors, how you doing, Bran, George, hi, Kman, AJ, Patrick, Ryan, team, how's it going? So, pretty important week.
Morning, Coach.
How are you?
Morning,
Yeah, it's
Coach.
Friday.
Yeah.
Oh,
What a
that's a
choppy,
Friday voice. If ever
what
you
a
heard
chop,
one.
yeah,
It's
what a choppy
Friday.
week. Ryan, nice short at 51.
Thanks, mate.
In the yen, I just wanted to check because, after that big spike, I forgot it, but 2 weeks. That's kind of almost a 2 week reversal. 49.82. So it's only 30 or so pips away from a reversal, and a key. It would be a key reversal if it had lower, because we see that little inside range last week, that tight range. So
Yeah.
we took out the highs, took out the lows early in the week, and if we finish down there, very negative candle.
Yeah.
Okay.
I think 150 is still my benchmark around here,
Yeah.
where we close the week above or below it.
So the expectations, guys, I guess are for jobs that come in a little weaker. A lot of that could be the auto workers on strike. That's going to play into it in this payroll period. What are you guys thinking about NFP?
Yeah, I'm not sure if we're seeing some. I don't know if we're seeing some of that in the jobless numbers or not. This strike business, because it's all counted funny. You like to count things funny over there, don't you? If you're on strike, you're employed but officially unemployed, sort of thing. But yeah, it's what happens. Do we get around expectations? The market's going to go, yeah, great, back to normal. If it's another bumper number, that's really going to get things, I think, turning a bit more hawkish, because then things are looking like they're hotting up rather than just, going steady. So, 180, 190K is expected. If it comes in, 50K either side of that, the market's going to go, yeah, so. Anything below 100K in the market's going to get a bit wobbly, bit of washout from that big number last month. And if it's another big one, then I think the market's going to get hawkish again. But will a dollar rally last like it didn't last time?
Yeah. I mean, I just went through all the weeklies, Ryan. All the weeklies look good, unless there are big reversals. I mean, I wouldn't go home short on a Friday. This or this or this.
Yeah.
I wouldn't go home long a weekend unless things change. This
You
finally broke pretty good from that 3 drive. I didn't stick with it. Look at that.
Hey,
Anyway.
Dale.
Yeah.
I was and this for everybody too. We're coming into the weekend, and we've seen risk come off every week, around this time, because people are worried of what's going to happen in the Middle East. You got Apple down 2% today. At last I looked, maybe it was down a little bit.
They're bringing it back. It's actually down $7 after the earnings, and it's recovered more than half.
It has, and the point, or the point of this comment is that unless something really terrible happens in Gaza, I mean, everybody is kind of becoming numb to it. And it's a conversation I had with Chris Weston earlier this week, which makes a lot of sense. I mean, unless the market feels it's really going to impact earnings moving forward, or the market's ability to be productive, maybe we don't get much risk covering going into the weekend. What do you guys think?
Yeah, they're pushing for a pause, so maybe we get that news, or some type of ceasefire. That's why Blinken is going over to Israel. We're numb to it because we believe it's going to be localized.
Right.
The whole thing changes. There's a big speech by the leader of Hezbollah today
Exactly.
that the whole world is waiting for.
Exactly.
Yeah.
And I think that's perhaps a little underestimated right now, seeing the market reaction in the past few sessions.
Because that changes the ball game
I
if
think so.
Hezbollah gets involved.
I think so. All the politicians are visiting Israel, but they can say whatever they want. If Hezbollah forces the rest of Middle East into the conflict, then we're talking about a whole different ballgame, I reckon.
Yeah.
And there's some proxies, you know, it's interesting you guys say that, and I 100% agree, and because that came out last night, right, that he was going to that this speech is going to happen. So and I don't know what time or anything like that, but
in an hour.
Is it in an hour? Okay, that's important to know. You look at some of these risk proxies, like I've been looking at this US dollar Norwegian krona, and I'm made a big stink about it because literally 2 days ago.
Why don't you take the charts after I just say this last thing?
Yeah, sure thing.
Weak dollar, lower yields, and this is the week that silver had. Okay, so I've been pointing it out all week that it's not participating, even when gold is firm, silver's weak. It's all right here in the gold silver ratio, because I know we have a lot of metal heads in here. Okay, that's a pretty good signal. You know, normally this means a stronger dollar. Okay, but this correlates pretty good with it. But the gold silver ratio is saying it's not silver's time. And you know what? If they do get a pause or a ceasefire, they're gonna cream the gold. So be careful if you're long metals. And to me, silver looks ugly.
Yeah,
all right.
Let's hope it's a ceasefire. You know, let's hope.
Yeah.
That. All right.
Yeah.
Hey, I was gonna just share with you guys like this analysis on the US dollar Norwegian krona, because if you look at the pair, now I'm just going to pull up the chart here. I was actually going to short this 3 days ago or 2 days ago. Like it was, you know, we were sitting here right about 11:16, and I'm like, okay, we're up against a big trend line, and risk is going to take off. I was thinking, we're going to get a little bit of a bounce here in the S&P. The dollar Norway is going to roll over, and and we're going to see it move down. I mean, crude's been weak, weakish, but it's still above 80, so not really a factor. And this thing has not pulled back. I mean, look at the US dollar Norwegian krona, and look at this. If it really breaks out above 1130, I mean, this thing's gonna go. This is one of those that, in case of emergency, rip cord, is just poised to break out. And that's the one thing, like, I look at things like this and I'm like, okay, I know what I'm going to do if things get, a little more, heated in the Middle East. But other than that, but you look at equities, right now, and we've had a hell of a bounce right back to the neckline of the inverted head and shoulder pattern. And Kman, I know you were showing this on the flow show just as we were wrapping up. You can see this longer term channel that we've had here. It's very light. I can actually make that a little thicker so you can kind of see what that channel looks like. And if you just extend that line, we're basically challenging the underside of this channel. So this is a pretty tricky area, right? Wouldn't you guys agree?
Yeah, absolutely. Yeah. I think for me, anywhere 43.1050 is where is going to be important where we close, I reckon.
Yeah, and so let's talk a little bit about let me make this back to light, because I don't want to completely disrupting all the charts. Let's talk about the jobs report really quick, and get everybody's thoughts here, because we can make that argument once again, that if we get good data, market rallies, because market's going to say, hey, we what recession? Never going to get a recession. This is a no landing. The stocks might wobble initially, but then we could get a rally. But if we get bad data, you might get the market rallying anyway, because they'll look at what just happened this week and say, the Fed chair is going to have keeping no real reason to be raising rates in the face of a little bit weaker data at this time. So the Fed's really going to be stationary. What do you guys think about the jobs report, and how do you want to trade it? Let's start with you, Ryan.
I'll trade it from the point of view of see what the number is and see what the reaction is. I'm not going to jump on it in the middle. If it's a strong number, I think dollar rallies are still favoured to get hit. So I would potentially be looking at fading any dollar rally, depending on how the numbers come out, rather than buy a dip on it.
Yeah. So let me I feel the same way. If the dollar dips, oh wait, you just said if the dollar dips, you want to buy it.
No, if the dollar rallies, I'm going to sell it.
Dollar rally. Okay. Yeah. Okay. I feel the same way, but look, can we just not ignore this bullish pattern? And this is my me thinking, am I in the wrong here? Because I got up this morning thinking the exact same thing. I'm like, let's just hope we get some strong data, and I'm going to sell into it. This kind of move, like get a little bit of a rally and then sell into it, right? But should we ignore the fact that we're just holding this big breakout point? I mean, the dollar has been that one asset class that hasn't really buckled. And why is that?
It's not buckled, but it's only been strong in certain assets. You can't say it's strong versus the euro and cable at the moment. You can say it's still strong in versus the yen. But then your answer to all those questions is what's going on in yields, and yields are below 4.7% in 10-year. That's your marker today. If we close above 4.7% on good numbers, then it keeps the highs in the target. But if we hold below this 4.7 area, you've got 4.8 there as your number, then it's going to keep the pressure on the dollar.
Yeah, and I'm going to come back to yields because I think this is an important topic. But let's go to Kman, get your opinion about jobs here. So what do you think about the NFP, and how do you want to play it?
Well, okay, I think the NFP is going to be a difficult one to trade, because we've got this Hezbollah guy half an hour later, and we got the ISM 1.5 hours later. So that's what I'm saying in the room. I'd love to trade everything as one package, and then trade risk on the back of it. If you only think about the jobs data, I think the consensus is there right now that regardless how the number comes out, that the market wants to sell dollar rallies, because that's been what's going on since we had Wednesday, right? So that is the consensus, and I'm not against it, to be clear. Because the euro and the sterling are looking both much better. Canadian dollar as well, and we have the Canadian jobs right away too. Yeah. I'm not against that, but then imagine that half an hour later this guy comes out and says it's war here, and what's going to happen then, But yeah, I've got those memories of the last labor report, where we had like a 0.5%, let's say, call it 0.5% rally in the dollar, and then a complete turnaround, and then gold started to rally, and silver that day too, and we may see a replay of that right after the NFP. That's so I'm rather with the consensus there. Now, this being said, I'm not sure that I'm going to trade the dollar before I hear about the other guy, but I may trade risk this afternoon, because I'm still a little bit positioned positive risk, if we could call it that way, with being short EURUSD, and I'm actually even short, but just a tiny bit euro sterling. So that's rather risk positive, and so I'm rather going to trade risk this afternoon.
Yeah. I was going to say just regarding your Euro Aussie, it is really on my opinion very critical support here, and if it breaks, it's going to be a nice move.
Yeah, if we get a risk positive afternoon, this thing is going to dump, I reckon.
Yeah, I agree with that. Yeah, and that makes a lot of sense, Kman. I mean, especially with, you know, it's not only a jobs report, it's not only ISM, which is probably going to be the more looked at data point, but then you got on top of it yesterday, now you got this Hezbollah guy that's gonna make his, he's gonna make a statement. So interesting. Dale, what do you think here? How are you going to navigate around this today?
I agree with the team that I went through the weekly charts. There's no reason to be long the dollar right now.
There's no reason to be long the dollar right now?
Yeah.
I'm sorry, I was just reading one thing that just passed my desk. Okay.
So that's what I think.
Yeah, gosh, and I hear what you guys say. I'm also, want to sell the dollar. That's, I came in today. That's kind of my plan. One of the things that I think is going to break out, and I have to just point this out because, and you can trade it, through the Euro Aussie, you can trade through it, however you want to trade it. I sit here and I look at the Aussie dollar and say, this thing has been resilient as all get out. I mean, you can go back and say, well, China's throwing a bunch of spaghetti up against the wall. Some of it's starting to stick. The Chinese economy is stabilizing. It's not that massive stimulus that you were expecting, but hey, what the hell? They tried to take a more I don't want to say
look at the compression. The compression. Last time Aussie confirmed a low was in August. And since that time, with all the new lows, the RSI's been making higher lows, and almost looks like the RSI broke out over 50.
Yeah.
So, anyway.
Yeah, no, I mean, it's looking and so here, we have a big broken trend line that we're back testing right now. You can think here, let's just put on that. Let me just add an S&P chart to this really quick, really fast. So, we've seen this big decline in the S&P, especially over the last couple of months. Aussie's hasn't been responsive. Then you start thinking about like, well, how about if there is things intensify a little bit? What happens to commodity prices during a, wartime situation? I start thinking about those types of things, and this Aussie just doesn't look bad. And, I don't know. I think this is the one I'm going to be keeping an eye on. And like I said, let me get rid of that. You can either, trade it through, across. You can, if you want to just get rid of the dollar, you can look at the Aussie, dollar. We could probably trade right back into this triangle somehow. But it is perky. And that's something that I'm watching going into today, and that's going to be on my radar. So let's go back to yields really quick, because I think you got Ryan. You made a great point. 10-year really coming under pressure. I actually blogged about the 10-year here, the 10-year note, and asking the question, has the market bottomed? And we're coming up against channel resistance here. Is it possible that the bond market breaks out and yields continue to tumble at this point, especially with all this issuance still slated to come out, despite the Treasury report from earlier this week? And what are your thoughts here, Ryan, on the bond market?
Yeah, I think everyone's going to be looking at that and see how those auctions go. But I wonder if it's one of those things again that the market just, it wets its knickers about in the interim, and then if demand continues the same levels, i.e. a bit lower, the market just gets used to it. I mean, if you take a closer look up at yields, or what price, whatever you want to look at, we had those highs up around 5%. We've had a steep pullback in yields. We broke under the levels. Now, as we sit here, it's testing those lows again. That's not a good sign. So it suggests potentially that we're going to see further downside. And if that's the mood going into the NFP data and stuff, then again, you've got to think good numbers, yield rally. You know, you want to be maybe looking at fading that by buying bonds if you're that way inclined. But yeah, I don't think yields are going to collapse unless, you know, demand really falls out. But even in that
I mean, if yields
you should go higher on that basis if investors are demanding an extra premium. But I can't see yields collapsing because we know the Fed are keeping their rates high. So, you know, maybe yields down to 4.5%, something like that, and we find ourselves in a bit of a range for 4.5, 480, 490, something like that.
Okay. Yeah, I mean, it's hard to see, you know, yields completely, you know, just buckle, just knowing, you know, just some of the issuance that's going to be coming, you know, down the road. It's, you know, you got to imagine at some point people go, okay, I bought enough, you know, I need a higher premium to be buying this. I'll say it. I'm buying this shit. So
I'm wondering if one of you guys could explain to me why, you know, a lot of experts say the bonds will rally with a weaker dollar, that a weaker dollar actually is bullish bonds. Can you explain to me why that is?
Yeah, because I think they start by thinking that the yields are going to go down, and that we are in front of a recession, whether it be a hard or a shallow one. So if your yields go down, it pushes the bond market up. But if the yields go down, usually it weighs on the dollar, and I reckon that's where their logic comes from. Yeah, but on the supply side of the bonds, and I've been thinking about that a little, Blake. The thing is as well, if the market now assumes that we've seen the top, and just take the 10 years, okay? There's still a lot of money parked in the RRP and in the money funds, right? Money market funds. Some of that money may decide, if they say like, okay, we think now it's time to put
they want to lock it in.
They are going to give they are going to create the demand for the supply that the Treasury is going to bring into the market. It's
Great
huge,
point.
right? The bond market, and there's still a lot of money parked in those funds. So if they decide for it to go to work, then I reckon your yields are going to not to go much higher anymore, because the Treasury will find a lot of candidates for their supply. It's just a mechanism that I think which is just possible, but that's what
You're a sage, man.
He is, man. That thank you, Kman. That's the great thinking there. And maybe that'll be the demand that the market needs, because it's not. Go ahead.
No, go ahead. I think Jim is Walsh bought bonds, I think, this week.
I think he bought them last week. I think he bought them down here.
Nice.
So yeah, he was buying TLT last week.
He has some big targets above here.
Oh yeah, he's
where it could recover.
Yeah, he's looking for, you know, way up here.
Yeah.
So hey, speaking of which, let's I want to not dismiss everything that's happening today. Well, I mean, as far as currencies go, here's Apple. Apple's trading down 2%. So pre-market, we're in the middle of this. I look at Apple, and I know it's come off, and I know we're going to be around the 200 DMA, but that's not a bearish chart. I mean, it's bearish from a you might say, well, we got a little bit of a false breakout here, but really it's still very constructive for bulls. I don't want people to forget that. I know Apple's a little oversaturated, and the China story for Apple has not been good. You saw, if you saw the earnings yesterday, you'd know that. But Apple, anyway, it's gonna be still in this wedge. So just keep an eye on it. All right, real quick, just taking a look around, and guys, just in case you want to chime in here, you look at the euro. Euro's. Notice how we failed above the 50 DMA multiple times over the last couple of weeks. And remember, this bar was green at one point, right? This bar was green at one point. This bar is green. That's today, but there's still a lot of time left in today. If you make this, well, you can make this red, right? You can just do it like this. We had a little false breakdown earlier this week when we held the 105.20 level following the ADP data that we talked about here on F.A.C.E on Wednesday. A little false breakdown. We got a reversal. Now you're challenging triangle resistance. Is it possible? I know the euro probably doesn't have a very far to go, but could the euro theoretically get up towards channel resistance 107.50, maybe the 200 DMA on some weak data? Yeah, why not? Right? You know,
Yeah.
you look at that. Yeah.
107. That's the number.
That's the number for you.
That's the only number for me. 107. If what are we now? 106.50. We might break it on a big number, but if we can't hold that break, then that's the level for me. So if we're talking about we're all bearish the dollar on a good number. There's nothing wrong with buying it, but you got to pick your levels where you want to buy it. And 107 might be one of those.
Yeah, and remember, a good number would put probably
put it down.
Yeah, I'd put it down a little bit. I mean, the euro would trade maybe down to 106.15, 106. Then you can use that as an opportunity to get long, maybe 106.25 again from earlier this morning. Sterling breaking this wedge resistance. How come Bailey didn't kick the shit out of this thing yesterday, Kman? What happened there?
That's a good question. That's one of his exceptional meetings where he didn't whack the sterling. So, but or only just I think just because we all fell asleep during his press conference. No, the thing is that all those major yields are moving together right now, and it's very tough to pick a side, really. So I reckon that's only short-termers are involved in the market as well. You look at the euro sterling, is still staying a bit elevated, but it's not making fresh highs, although the lows are higher over the medium term. But then, the market is maybe tired of selling sterling for a while. I really have no other explanation than to say that was it on the Bank of England meeting and move on.
Ryan, you calling the bottom here?
Calling what, sorry?
Are you calling the bottom in the pound?
Am I calling the bottom? Don't know. I'm short. So the bottom versus the euro, but cable looks like it's pretty solid into that 121 at the moment.
Right. All right. Well, we have about thank you, Brand. We have just a couple minutes, 2 minutes until we have data. So let's go ahead and put the dollar up here. Dale, any last minute words? I'm going to put us into our 3-chart configuration for this. Oh, you know what? We didn't even talk about the dollar CAD, but let's do that for 1 minute. One minute, real quick. So dollar CAD, real big reversal. I want to show you guys this channel. Remember this channel? Long. You can see all of my highlighted. Look, we're retesting that. That's how big I think this level is right now. And you could get that double whammy. I don't have any position in the CAD. I tried to buy it yesterday. Didn't work out so well. As it was coming down into this trend line, it just stayed heavy. But you see the dollar CAD, it's right at really critical support here. You guys have any feel on the Canadian jobs?
Yeah, I think it's going to your red line.
Yeah.
No,
go ahead.
Red line, the lower one.
Sorry, Dale. Go ahead.
That's all right. Go ahead, buddy.
I think there's something around one. I've got something around 137.70 as well. I think it's maybe your line that with me comes a little higher, but I'm just going to use that as a point of measure. Are we above or below once the dust settles, and that may be it. Then
got it.
Direction.
Okay. All right, cool. Well, let me put it back on the dollar index. Like I said, we have about a minute, and then I'm going to flip this over to our 3-chart configuration. Let me see if I have already launched. I do. Data Flash that comes. You can get it on your ForexAnalytix platform. It's right here next to your calendar. You can see the jobs data. I'll have it right here as well. But we're going to run this. Oh, shoot. Where's my S&P chart? Oh, there it is. Here's yield.
Looks like
and then
something
here's the
came
dollar.
out.
Yeah, it looks like it, right?
Looks like it already leaked.
Did we get Timmy leaks, WikiLeaks, NFP leaks,
Sure,
Here we
acting
go.
like
Dobby leaks?
Here we go. 150.
150. Well,
Woo!
wow, look at the dollar just getting absolutely smoked here. Absolutely just crushed. Holy cow.
Unemployment ticking up another 10th.
Wow.
Yeah, so
All right.
unemployment up a bit more than expected. That was with the participation rate coming down. So that's a double negative on that. Wages up more than expected, 4.1%. So there's some inflation pressure there. What happened with revision down to 297 on last month as well. So take both months together, we're there or thereabouts. What we were running at.
Wow. So hey, look, guys, we're getting some risk on. So just think about that, as the market's really enjoying the fact that the data is coming in a little weaker. Actually, I mean, it's a little weaker pretty much across the board. I mean, look at all this data, even the Canadian dollar is strengthening on weak CAD data. Unemployment rate went up. Wow. So this is all a dollar story. This is just kind of confirming what the Fed has been telegraphing to us, that they're going to end up keeping rates unchanged. I think this gives everybody reason to be buying. Now, the question is going to be, will the ISM confirm that data? And are we not going into
a recession?
A recession, and then we have this conference here in 30 minutes with Hezbollah. So maybe there's a ceasefire. Next thing you know, the S&P is up 4% for the day. What do you guys think? I lost everybody. Dale, you here? What do you think?
Sorry, we were just updating. We had some 40K negative revisions as well on the NFP. No, the market is in the mood for selling dollars right now. So if you take the whole thing together, look at the 10s, they are below 460. We're in the zone there. Really in the zone, and the 30s as well. 470 on the 30s should be a support as well. If it breaks down there, the dollar could get another knock on the head.
I said 104.50 yesterday.
Here we come.
Yeah.
And you said that would be a breakdown. I actually think that would be a place to buy the dollar again. So what's that, 108 or so in the euro? Another 100 pips or so?
Yeah. I mean, the dollar index, let's see, we're now, remember, we got flag support coming in somewhere around here if this is truly a flag, but I would say that might even been a false breakout. Might get down to 105.15 today, and then maybe down to 104, which would be that previous channel which you're just discussing, right?
Yeah.
So I did buy some Aussie dollars. I got a kind of a crappy fill, but I'm long and I'm up a little bit. I just updated the ForexAnalytix trades room. I was doing that, and one of the other positions I'm in is I'm looking to trade the Aussie in a different way as well. So there's a couple of ways I'm going to try to skin this cat, but yeah, that Aussie is breaking out. Now, if we get above this 65.25, that should open up the door for a little bit higher levels. What are you guys doing right now? I know you don't have an interview, right, Dale? Let me just make sure. No. Okay. All right. What are you guys doing here? Ryan, anything?
No, I'm watching Euro dollar. We tapped 106.96, but can't hold it. The initial reaction is to sell the dollar. Okay. But it was 297 last month. It's 150 this month. Taken both together, it's roughly 225K across the 2 months. There's nothing to panic about there.
Yeah, no, I don't think there's anything to panic about. But this weaker data, doesn't it confirm to you that maybe the Fed is taking the right approach by being cautious? The Fed chair is not like he can't be straight out dovish, but he's You know, he's basically, you know, going to wait and see, and we are, you know, seeing the jobs picture worsen a little bit, so it keeps
No,
the
well,
Fed sidelined.
we're not. I mean, you know, last month was an outlier, 336. You know,
Right.
it blew everything out the water. It's been revised down, you know, 40k. This one's softer by, you know, 40k than expectations. But as I say, take it as an average, and you got 225k across both months. That's still solid numbers. All right, the unemployment rate ticked up to 3.9%. Woohoo! You know, come and see me when it's 4.5%, 5%, and then we'll talk about a weakening jobs market. But yeah, it keeps the Fed exactly where they are. No need to be more hawkish. No need to be less hawkish. We know what they're doing. We know what they're at. This data confirms it. Now we'll see what the price wants to do. You know, as I said, euro dollar got stronger, but it can't get through 107 for now, and that's your marker. So let's see. I'll be worried. I'll be wary about this move in dollar yen. It's following yields. But as I say, if we start to see 150 holding as resistance, then, you know, we're back in the box. But you can't do much. We've got this Hezbollah guy speaking, and then we've got the ISM. You know, we get a really strong ISM, and it all flips around again.
Right. Yeah. And I have this. This is the rate check move day that happened here on the beginning, actually exactly 30 days ago, exactly a month ago, right here. And you can see this makeshift like ascending channel. So that support comes in around 149.20, let's just say roughly. So that should be really watched, I think, carefully, because if yields break down, this breaks down. Kman, I know you're short dollar yen. What are you thinking here with this move that we're seeing in equity, or move in the markets in general?
This is weighing on yields now, and the reaction is as well very, very positive risk, apart from perhaps the Swiss, but I think that's more a dollar thing than the Swiss thing. We're back on support, by the way, there as well. So back to important levels on the dollar, and if ISM confirms, just not taking into consideration what the Hezbollah guy may do or say. If ISM confirms, then we could be in for a bit of a break on the US yields, huh?
Yeah, I mean,
I'm very cautious. Yeah, as I said, I'm short EURUSD. I couldn't find a level to buy my Aussie dollar yet, but I like what you showed earlier around that 60. What is it? 64 quarter a half, 25.40. I like that, and probably any setback there could be a good trade long for the Aussie dollar if you combine risk and the dollar.
Yeah, this Aussie, like, it's been so damn resilient. It's like, how if I was short, which I'm not, but if I was short, I'd be like, mother, you know,
about selling the S&Ps and looking for a wave 2 pullback. You know, we've rallied 240 handles in the last 5 days. Why can't we pull back 100 handles? And I think this
Dale, I'm going to go back to bear markets that we've been through, and I've been through, you know, several, you know, just, you know, in my time. Bear market rallies are sharp, and they're freaking convincing and ugly, right? So, you know, I look at this, like, I look at what, you know, just kind of going out longer term here. You know, could we, you know, on all, like, let's say there's a ceasefire, let's say the data a little weaker, people are, you know, now you get FOMO into year end, you know, you get seasonality kicking in. I mean, why couldn't the S&P go woo to 4,500, you know, before we roll over again? You know,
I'm just talking about a trade for a pullback. We've rallied in a straight line. Okay, so I think that this 43.40 level, I just remember, was important. So
43.50 is a 50% retracement, just based on what I've got here,
even on the way up. So I'm just, you know, I'm just saying it's a trade. I'm not saying that we're going to go to 3,800. I'm saying we could pull back to 42, 42.50. Anyway, just
and look, and by the way, look at relative strength. Just intraday relative strength. The highest, and this is a 4-hour chart, so let me move that out of the way. You can see the highest level that we got to was back in June, right? This is and we're not far away from there right now, which would be in the about 83, 85 level. Not quite there. So we are overbought, could be a little overbought-erness. You know, but that's not necessarily bearish. That's just, you know, kind of confirming an up move here. But hey, equities are coming off. Dale, maybe somebody out there is like, Dale's smart. I'm following Dale here.
You know, I think you know all the big traders come to face.
Yeah.
What's going on,
know
guys?
to know what we're thinking.
Yeah. Hey, Nick, how you doing? What's up, Grasshopper?
What's going on? Yeah, I'm kind of thinking about what Dale just said. And Blake, you mentioned on the daily roundup yesterday, you know, what if we got 150 or 160,000 jobs? Because aren't we still creating jobs? Also the Fed, I was talking about it all week. I thought if the Fed left the door open, that the market wouldn't like that. Clearly it ran with the pause. But, you know, we had the Fed leave the door open and we're still creating jobs. And I see that RSI that you just showed, Blake, on the 4-hour. And I think, you know, I'd like to be short on some divergent RSI on that. You know, what if we did pull back a bit and then make another high in the equities, but it's on divergent relative strength? This market looks like it might be bought on dips. But I think to Dale's point, you know, we could see a bit of a little pullback.
Yeah. Maybe we can't. I want to. Guys, I'm gonna well, Kman, are you still here? I'm not sure if he's still here. Let me look.
Still very much here.
Okay. Hey, Kman, what would you say currency wise? Actually, let me forget that. Yen currency wise, what is the closest association to the equity markets, would you say?
In the yen crosses?
Yen crosses.
Aussie yen, Kiwi yen. You're talking about the positive or negative?
Positive or negative, but
okay. Mex yen, Aussie yen, Kiwi yen.
Okay,
those are probably the closest ones. If it's really very, very positive or very, very negative, sterling yen should be on the move as well. But I'd keep it to those ones. And the reason as well why I'm relatively positive on those things like Aussie and Kiwi right now is that because it's a little bit further from their bed, the bad action that we see in the Middle East and even taking Ukraine. So if risk goes positive, they can likely take more comfort from it than some other currencies who are closer to the bad action.
And what about well, okay, we can go into all that, but what about, you know, commodities catching a bid in a risk-off environment because of scarcity too? It's entirely possible. Anyway, not it's neither here nor there at this moment, but look at the Aussie yen trying to break higher.
Yeah, metals are bouncing as well.
Yeah.
Look at this. Look at
even
this.
Silver rally now.
Dale, you'll like this.
Yeah.
Aussie yen, November 2007, you know, when the GFC started, right?
Yeah.
Basically, this is our first hiccup of first bank, second bank, Lehman, Bear, right? And then, you know, what happens if we break 98.50? I mean, could we go see 100, 102 again? I mean, isn't that entirely possible on a breakout here? I mean, I'm just looking at the Aussie yen. It's like hard to fade risk when you see that, you know, moving. Yeah. So anyway, just a lot
Chris Laurie.
Huh?
Chris Laurie made that famous.
Chris Laurie, he did. I remember working with Chris Laurie back in 2005. Yeah.
The Olympian.
Yeah, the Olympian, the bobsledder, or the is it a bob? No, he was on a it was a sled, but
yeah. What
did they call it when you go down the, I guess it is bobsledding. Anyway. Yeah. Hey, guys, I want to say great show. We got the morning edge coming up in about 30 minutes. It is, you know, for the ForexAnalytix community, but I want to say what a great week this week. Good read. We got this Hezbollah press conference coming up in the next 15 minutes. So obviously keep your head on a swivel, right? I mean, it's and we have ISM. So this is no time to be, you know, chalking it up to a great session and pulling away from your computer here, because things can get real fast and in the other direction. So, Ryan, any last minute words for the viewers?
Yeah, just to reiterate what you said, if you've made some money on these moves, if you've got the direction right, think about taking a bit off the table. I've just done that with my dollar yen short, and might do some with my euro dollar long. Just beware of these risk points. We got this Hezbollah, then we got ISM. It can flip like a light switch, and then all of a sudden you're offside.
Yep. Kman, any thoughts here?
Yeah, I mean, a bit the same. Watch out for what this guy is going to say in 15 minutes, and especially on gold. We've seen like a huge rally on gold after the problem started over there, and we are on the resistance again, exactly there. 2005, 2012. If it goes through 2012, 15, when the guy is talking, it's means that it's not good news, and we could really ramp another I don't know, 30-50 bucks higher.
All right, I just took my Aussie longs off, just pulled them off, and I'll be trading in and out of that pretty much all day. So I personally just I'm doing exactly what Ryan just suggested I do as we go into these risk events. So Dale, last minute thoughts before we sign off.
I just want to thank Kman and Ryan, and they have really supercharged F.A.C.E, and want to thank them after they do a show earlier in the day, that they follow through and come in and edify this group of viewers and attendees.
Yeah, I mean, literally, they were just broadcasting 2 hours ago, or an hour ago. Excuse me, I'm sorry, an hour ago.
Yeah.
So
thank you, Dale. Thank you very much, Dale. Thank you for leading all us troops here on the F.A.C.E.
I've learned so much from you and Kman, Ryan. Really have.
Likewise, mate.
So,
likewise.
So
Dale,
I'm sure
Dale, you should change your nickname from coach to shepherd.
Oh, okay. All right. Well, I'll carry you over my shoulder anytime you break a leg.
I wouldn't bet on that, mate. You haven't seen me.
As long as you don't try and milk us, that's okay.
Yeah. Anyway,
Ryan on one shoulder and me on the other, and I don't know how far you're gonna get, to be honest.
you guys prove the name Dream Team every day we're here. So,
cheers for that.
Thank you, everyone, all our viewers. Have a great weekend. Hope we've added value to what you're trying to accomplish. It's not easy. And have a great weekend, everyone. See everyone Monday.
Thank you,
Don't
Coach.
just count your pips, count your blessings, and people around you that you care about. They're not mind readers. Tell them how you feel. And that's going to be a wrap. Adios, everyone. Thanks, team.
Cheers, guys. Thank you.
Thank you, guys.
See you guys.
Cheers.
Bye-bye. Thank you, George. Adios.